Welcome, curious minds, to another deep dive. Have you ever felt, just lost trying to navigate the financial world these days? It's changing so fast. It's exhilarating, sure, but also, well, pretty overwhelming. Money's evolving at breakneck speed, and keeping up, staying truly informed and empowered. That's the real challenge. It's easy to feel adrift. But that's why we're here. Today, we're diving deep into Elevra. It's a platform promising to unlock something they call decentralized capital. We're going to explore their core vision, really try to understand why a system like Elevra seems so needed right now in this complex financial landscape, and importantly, unpack what it actually means for you. Our mission, as always in these deep dives, is to pull out the most important nuggets of knowledge, the key insights, straight from Elevra's own materials, basically giving you a shortcut to getting informed about this very innovative approach to finance. Okay, so let's unpack this. Elevra's founder, Jeremiah, he sets the stage right away. He says joining a waitlist isn't just about getting early access, it's about joining a movement.
What's really interesting is how they immediately challenge that idea that you have to pick a side, traditional finance or blockchain. They believe the two can actually work together. That cooperative vision, I think that's really their crucial starting point.
It really is. It's quite a refreshing take, isn't it? Usually the narrative is DeFi versus the old system, like this big battle. But Elevra's view is more about integration, about evolution. And that message is, I think, much more accessible, maybe more powerful for anyone feeling kind of caught between those two worlds.
Absolutely. And to really get what Elevra's building, we first need to maybe re-anchor ourselves on the basics of decentralized finance. I mean, most of you listening have probably heard the term DeFi, but maybe for those newer to the space or just as a quick refresher, what does it actually mean at its core?
Right. So at its heart, decentralized finance, DeFi, it operates entirely without the usual go-betweens. Think banks, brokers, even the big centralized crypto exchanges like Coinbase. Instead, it runs on public blockchains, mostly Ethereum and Solana are the big ones right now. And it uses these self-executing programs, smart contracts, to handle financial stuff transparently, automatically. Unlike traditional finance or TradFi, which is all about permission, right? Gatekeeping. You need approval. DeFi is designed to be open. Anyone with internet and a crypto wallet can jump in. That immediate accessibility, that really changes who gets to play in the global financial game.
That's a huge shift in access, yeah. Beyond that openness, what are some of the other, key things that really set DeFi apart?
Okay, there are about 5 core characteristics that really show the paradigm shift DeFi represents. First off, permissionless access. This means, fundamentally, no need for a bank account, no credit score checks, no national ID needed to get started. You can lend, borrow, earn interest, trade all without any paperwork. Think about the global reach, the inclusivity. It could potentially bring billions of unbanked people into the financial system. It breaks down those old barriers.
Right, so bypassing all those traditional gatekeepers. But if anyone can get in, what about trust? We trust banks, sort of, because they're institutions. How does DeFi build trust without them?
That's a great question, and it leads straight to the second point. Trustless infrastructure. In DeFi, there isn't one single entity in charge. Instead of relying on a person or a company to be trustworthy, you rely on smart contracts. That's the self-executing code we mentioned. These contracts replace human intervention. They enforce the rules automatically, executed by the decentralized network itself. So the trust isn't in a person, it's in the math, the cryptography, the code.
That's powerful for accountability.
Yeah.
And does that make things more transparent, too, if it's all code?
Exactly. That's number 3. Transparency. Because it all happens on a public blockchain, every transaction is visible, verifiable, by anyone. And often the code behind these smart contracts, it's open source, so anyone can look at it, inspect how it works, audit it, check its integrity. That gives you a level of auditability, of clarity, that's just, unprecedented compared to traditional finance, where so much happens behind closed doors.
So you can literally see what's going on. And the code itself. It's not just for simple stuff like sending money, right?
Yeah.
You can do more complex things.
Oh, absolutely. That brings us to programmability. Smart contracts allow for really complex automated actions. Think about automatic interest payouts, no bank teller needed, or staking rewards distributed programmatically. You can even build loans with automatic liquidation rules coded right in. This is what people mean by code-driven finance. It's efficient, it's precise, and it takes human error or even bias out of the loop.
And the last one. The one often called money Legos. What's that all about?
Yes.
Sounds fun.
Yeah, it's a good analogy. That's composability. It basically means different DeFi protocols can connect and work together seamlessly, like Lego bricks.
Yeah.
So, for example, you could say deposit funds in Protocol A, then use that deposit as collateral in Protocol B, and maybe also earn extra yield through Protocol C, potentially all in one go, automated. It shows how modular and innovative DeFi is. Developers can build new things by snapping existing protocols together. The ecosystem just keeps building on itself.
Okay, let's make this really concrete. Say I want to borrow some money. How is DeFi really different from going to my bank?
Right, let's walk through that. In the TradFi world, borrowing, say, $1,000, you go to the bank, fill out loads of forms, give them your whole financial history, and then you wait. Days, maybe weeks. And there's no guarantee you'll even get approved, right? Depends on your credit, other factors. It's friction-filled.
It's definitely a process, a long one sometimes.
Now, contrast that with DeFi. You connect your crypto wallet to a lending platform. You lock up some collateral, say $1,500 worth of Ethereum, because DeFi loans are usually over-collateralized for safety. And then, boom, you instantly receive a $1,000 stablecoin loan. The differences are huge. No credit checks, no waiting, no asking for permission from some central authority. It just highlights that immediate access, that efficiency. It bypasses all those hurdles.
That accessibility really is striking, and we see similar things happening across other financial areas too, right? Like lending and borrowing on platforms like Hive or Compound.
Exactly. Trading on decentralized exchanges, DXs, like Uniswap, earning interest through yield farming or staking, managing assets through DAOs, decentralized autonomous organizations, even insurance is popping up. It's a whole ecosystem.
So this raises the big question. Why does any of this really matter beyond the tech? What's the deeper meaning for you listening?
Yeah, it's not just cool tech. It's framed as a realignment of economic access.
Right. DeFi basically removed the need to trust those big centralized institutions. It lets code, community, and capital just move freely across borders, across different blockchains. It fundamentally shifts the power, putting control more directly in your hands.
And that exact idea, that realignment of economic access, that's the foundation Elevra is building on. Their whole mission seems to be about empowering users like you to understand this stuff, to participate and actually benefit from it, even if you've never touched crypto before. They see DeFi as a path to greater financial freedom for everyone, not just the tech crowd.
So, breaking down barriers. But let's be real. For most people, the traditional system, CeFi centralized finance, it's still here. It's familiar. It's necessary sometimes. We need to talk about bridging that gap. What are the actual trade-offs between CeFi and DeFi? And maybe first, what exactly is CeFi in this context?
Good point. CeFi, centralized finance, it covers the traditional stuff, banks, credit unions, brokers. But it also includes those big centralized crypto platforms like Coinbase or Binance. These are all intermediaries. They manage your money, handle your transactions for you. They often give you a familiar interface, customer support, sometimes regulatory protections. But that convenience usually comes at a cost. Less control for you, maybe less transparency, and often, less access compared to DeFi.
It's the classic trade-off, isn't it? Convenience versus control. Let's really break down those key differences point by point. What do you gain and lose with each?
Okay, let's do it. First up, maybe the most fundamental. Custody. Who actually holds your money? In CeFi, a third party holds it. Your bank, your broker, Coinbase. You don't directly control the private keys to your assets, you're trusting them. In DeFi, you hold your private keys. That means you have direct cryptographic control over your funds. It's about ultimate ownership. You know the saying, not your keys, not your crypto.
That's a massive difference. Okay, what about just getting into these systems? Access itself.
Right, access. CeFi is permissioned. You need ID. You go through KYC. You have to meet certain criteria just to open an account. DeFi, permissionless. Got internet, got a crypto wallet, you're in. It's open to pretty much anyone, anywhere.
And trust. We talk about smart contracts in DeFi. How does that compare to trusting a bank?
Yeah, trust. In CeFi, you trust the institution, its license, the regulations, maybe government insurance like FDIC. In DeFi, you're trusting the logic of the smart contract code and the consensus mechanism of the blockchain network itself. It's trust in math and decentralized agreement, not a single entity.
And linked to that, transparency.
Transparency. CeFi is often pretty opaque, right? Ledgers are closed. You only see what the bank decides to show you on your statement. DeFi, everything's on-chain. 100% visible to anyone who wants to look. Unmatched transparency and auditability.
What about the risks? They seem different in each system.
They are quite different. Risk. In CeFi, you worry about things like insider fraud, the platform getting hacked, regulatory crackdowns, or even with less reputable exchanges, them just disappearing a rug pull. In DeFi, you avoid those centralized risks, but you face others. Smart contract bugs are a big one, flaws in the code. User error is another, sending funds to the wrong address, losing your keys, and of course the volatility of the crypto market itself.
And speed. Banks can feel slow.
Definitely. Speed. CeFi often involves delays. Transactions take days to settle. Banks have opening hours. DeFi, near instant settlement usually, and it operates 24/7 globally. As long as the blockchain is running, it's open for business.
Okay, last one. Making money, like earning interest or yield. How do they stack up?
Yield potential. In CeFi, think savings accounts. You're typically looking at pretty low rates, maybe 1% to 5% APY if you're lucky these days. In DeFi, the potential yield can be much, much higher, sometimes 5%, sometimes over 100% APY. And this is crucial, that higher potential yield almost always comes with higher and often more complex risks.
To make that custody point really clear, think about, say, renting a safety deposit box at a bank versus having a safe in your own house. What does that tell us about control?
That's a perfect analogy. The safety deposit box at the bank. It offers some convenience, some security, the bank guards it. But your access is limited to their hours, and ultimately, the bank controls your access, even the existence of the box. If the bank fails, what happens? Your own safe at home. You have total control. 24/7 access, but you also have total responsibility for keeping it secure. Nobody else is going to protect it for you. That maps directly to CeFi versus DeFi custody and access. CeFi, give up some control for convenience or institutional trust. DeFi.doc, you get full control, but also full responsibility.
So does all this mean DeFi is going to kill banks? Is TradFi doomed?
Not necessarily, and certainly not according to Elevra. The source material is quite clear. CeFi is still really useful. Think about getting your regular money, your fiat currency, into crypto in the first place. That often happens through CeFi. Plus, things like insurance, customer support, especially for beginners. CeFi often handles that better right now. What's really interesting is Elevra's core idea isn't about destroying CeFi. It's about blending the best of both.
Right, and that's where Elevra really positions itself as the bridge. They want to use DeFi principles, that transparency, that user control, but also connect to traditional assets, things like ETFs, stocks, helping you grow wealth across both systems, ideally seamlessly.
Exactly. The key takeaway from Elevra seems to be DeFi doesn't destroy CeFi, it rebalances it. Elevra's mission is about giving people control, giving them clarity without making them choose between the old and the new. Their vision is explicitly cooperative. They say the future isn't just decentralized, it's cooperative. And that focus on cooperation, that's a big differentiator.
That cooperative idea really does stand out. Let's dig into the specifics now. How does Elevra actually plan to plug into those core DeFi activities we talked about? Lending, trading, yield farming, staking. They're not just copying things, right? They seem to be adding their own layer focused on risk management and education.
Precisely. Let's start with lending and borrowing with a twist. So standard DeFi lending lets you earn interest by supplying assets or borrow against collateral. Pretty straightforward. Elevra takes that idea but simulates community-driven lending pools. Here's the twist. Staked funds within the simulation can be voted into stable yield instruments like stablecoins or ETFs. The goal seems to be providing more real-world security compared to just pure crypto-on-crypto lending, which can be super volatile. What's really clever here, I think, isn't just the simulation. It's that they're bringing in traditional portfolio thinking, diversification, managing risk into this DeFi context, letting you learn practical wealth management, but without the actual financial risk. It's a bridge between theory and doing.
So simulating lending, that includes traditional, maybe more stable assets.
Interesting. What about trading? Decentralized exchanges, DEXs, like Uniswap. Is Elevra building one? How do they fit in there?
Right, so Elevra isn't actually a DEX itself, but what it does is mirror liquidity behaviors by simulating allocation of capital between assets. What does that mean? It means within their system, capital tokens, simulated stocks, stablecoins can be moved around based on what the community votes for. So they're essentially mimicking real-time portfolio shifts, but in a controlled, simulated space. It's less about fast, speculative trading and more about learning how portfolio management and capital allocation work through simulation and community decisions. You see the dynamics without the real money risk of a live DEX. That simulation aspect for learning keeps coming up. Now, yield farming. That often sounds like the Wild West, chasing crazy high, often unsustainable returns. How does Elevra handle that?
You're right. Yield farming can be risky business. High APYs that disappear overnight, impermanent loss. It's complex. Elevra explicitly steers away from that. Instead of pushing users towards those unsustainable high-yield farms, their system favors risk-managed pools. And here's the key part. The yield in Elevra's simulation comes from a blend of crypto strategies and traditional finance strategies. And crucially, these strategies are voted on by the community. That's a big difference from typical yield farming. It's focused on sustainability, education, collective intelligence, not just chasing the highest, riskiest APY. It's about teaching long-term wealth strategies.
Okay, and the last piece, staking. What's Elevra's angle there?
So staking usually means locking up tokens to help secure a network or earn rewards. Elevra offers simulated staking with tiered allocations. What's really insightful is how you stake. You lock your ELV tokens, that's their native token, but you do it to specifically choose a risk profile, low, medium, or high. Those funds are then virtually deployed in the simulation into a mix of DeFi and TradFi instruments matching that risk level. Your simulated rewards, your APY, are based on how those simulated assets perform, plus the governance rules set by the community. So you're actively learning about risk versus reward, seeing how different strategies play out, but in a totally safe, practical way. It's learn by doing for complex financial ideas.
Right. We've talked about how powerful DeFi can be, but also, yeah, it's chaotic. It can be intimidating. What are the common traps people fall into, and why is something like Elevra needed now?
That hits the nail on the head. The problem is, DeFi is overwhelming for newcomers. It's full of jargon, hidden risks, way too much hype. It often lacks clear educational resources or frameworks for thinking strategically. And worse, like the source material says, it's riddled with shiny APY traps and vaporware protocols. Those are projects that promise the moon but deliver nothing, often just designed to pump a token price briefly before collapsing. They can really hurt inexperienced users. The truth is, most people don't need more risk. They need clarity, they need structure, they need to feel empowered to make smart choices. That's the gap Elevra is trying to fill.
So Elevra isn't just throwing another protocol onto the pile. It sounds like it's designed to be a gateway.
Exactly. It sets itself apart because it aims to educate users before asking them to commit real capital. It offers that tiered staking model, blending TradFi and DeFi logic intelligently. It empowers the community to vote on how simulated capital gets used, fostering collective wisdom. And crucially, it simulates transparent portfolios across different asset types, letting you see how it all works without the immediate financial danger.
Which means they're not trying to be the next big hype coin chasing crazy returns. Their goal, it seems, is to be the first educational-first DeFi ecosystem where the people guide the capital intelligently. That's a huge difference in approach, aiming for knowledge over just noise.
Absolutely. And if you tie that back to the bigger picture, Elevra's mission seems to boil down to 4 things: access, transparency, yield, and independence. For access, DeFi opens doors, but Elevra removes the intimidation factor with guided learning, makes it truly accessible. For transparency, DeFi shows on-chain data, but Elevra simulates visibility across risk levels, showing you the what's and the why. For yield, DeFi has high potential, but Elevra adds structure and community voting to manage that potential smartly. And for independence, DeFi lets you own assets, but Elevra helps you own your learning, your growth, your returns. It's about intellectual ownership, too.
Yeah, that quote from Jeremiah really sums it up. Elevra is not about being the loudest in the room, it's about being the clearest path forward. It highlights that commitment to clarity, to empowering the individual user. Okay, so we've got the vision, why it's needed. Now let's get to the heart of their system, the Elevra token, ELV. A lot of people, especially if they're new to crypto, might just think value means price. But in this world, it's usually much deeper than that. What actually gives a token like ELV real power, real value within its ecosystem?
That's a really important distinction to make. A token, yeah, it's a unit of value on a blockchain. It can act like digital cash. But its real power often comes from what it represents or what it lets you do. It could be access to features, voting power and how the platform is run, proof of ownership, or incentives to participate. There are generally 2 main types. Utility tokens, which is what ELV is. These are used inside the system to access features, vote, earn rewards. Then there are security tokens, which represent things like ownership in a real-world asset or rights to profits, and these are usually regulated like stocks. Elevra is very clear. ELV is a utility token designed for specific functions within their simulation and governance, not as a speculative security. That distinction shapes its purpose.
Okay, so it's a utility token. Now, what actually drives its value? Beyond just market fluctuations, what makes it useful or desirable?
Right. There are about 5 key things that contribute to a token's underlying value. First, as we said, utility. What can you actually do with it? For ELV, you use it to participate in that simulated staking we talked about, and in governance. It gives you influence over simulated asset allocations. It unlocks deeper educational content and rewards on the platform, so its value comes directly from its function within Elevra.
Makes sense. It has a job to do. What's next?
Second is scarcity. How many tokens are there? Is the supply fixed, or does it keep increasing? Some tokens, like Bitcoin, have a hard cap, creating scarcity. Others are inflationary. New tokens are made all the time, which can dilute value if not managed well. Elevra has a capped total supply, 1 billion ELV, and they mention structured emissions and vesting schedules to prevent dumping. That means tokens are released gradually, strategically, and often team insider tokens are locked up for a while. This aims to prevent a sudden flood of tokens hitting the market and crashing the price, a common issue. It creates a controlled supply, aiming for sustainability.
Okay, controlled supply. But why would people actually want to get this token in the first place? That sounds like demand.
Exactly. Demand is the third driver. Why would you want to acquire and hold ELV? Demand comes from people believing in the project's mission, having a strong community, the practical value it offers, like the education, the simulation, the governance rights, and its role in accessing potential yield strategies within that simulation. For Elevra specifically, they say demand is driven by its link to those real-world aligned DeFi simulations, the transparent voting, and its appeal to users who want to be educated and empowered, who see its purpose beyond just price speculation.
And once you have it, can you actually use it?
Yeah.
Trade it easily. That must be liquidity.
Yep, liquidity is number 4. If a token is hard to buy or sell, its practical value drops, right? Liquidity usually comes from being listed on exchanges, especially decentralized ones, DEXs, having an active community trading it, and having broad utility within its own system. For Elevra, they state that while initial liquidity will be simulated within their platform, the longer-term plan includes bridgeable access to exchanges or real asset-backed staking flows. This suggests a future path towards real-world integration and easier trading.
Okay. And finally, what do you actually get just for holding ELV? Are there direct benefits?
Yeah.
Incentives?
That's the incentive structure. Does holding the token give you rewards, special access, voting power, influence? For ELV holders, the incentives are pretty clear according to the source. You get simulated staking APY based on the governance tier you choose, you gain access to deeper levels of educational content, and importantly, you get governance weight. Your vote matters in directing those simulated fund allocations. It's about tangible utility and influence within the Elevra world.
That really paints a picture of a token designed with purpose. Elevra also uses what they call a hybrid token model. Can you maybe quickly explain the common models and then how Elevra's is different?
Sure. So very broadly, you often see 3 main types. Inflationary tokens. More tokens are minted over time, often to reward users, like stakers or liquidity providers. This can attract people early on with high rewards, but if it's not controlled carefully, it can lead to massive inflation and price drops. Elevra says they avoid unchecked inflation, using scheduled releases tied to growth. Then you have deflationary tokens. The total supply decreases over time, usually through burning mechanisms, removing tokens from circulation. The aim is to increase scarcity and, hopefully, value. Elevra mentions they might introduce burn options later, maybe tied to governance actions or penalties, but only if backed by real participation, not just burning for hype. And finally, governance-based tokens. Holding the token gives you voting rights on platform decisions. This is key for decentralization, community building, and aligning incentives. This governance aspect is critical for Elevra, and this is where their hybrid model comes in. ELV's model is described as controlled inflationary through those vesting schedules and supply cap, potentially deflationary via community votes later on, and fundamentally governance-based at its core. ELV holders don't just vote on minor things, they determine capital deployment across simulated DeFi and TradFi strategies. The source calls this guided capital aggregation, not just governance theater. It's about real influence on the simulated strategy.
That shows real direction. What they say, a token without purpose is just a trend. A token with direction, that's a movement. It feels like ELV is designed for that direction, that action. Okay, let's get even deeper into ELV's core logic. The big idea is ELV unlocks this ecosystem, a structured simulation of capital allocation, blending DeFi intelligence with community governance. This is where the real-world learning really happens. Tell us more about the simulated staking, the tiers, and how your vote actually shapes things.
Right. The core mechanic here is simulated staking. When you stake ELV in Elevra, it's not just about earning a passive simulated yield. It's an active choice about strategy, how it works. You stake your ELV tokens on the platform, and when you do, you choose a specific risk tier, low, medium, or high. Each tier simulates a different mix of real-world assets, making the learning very tangible. For example, the low-risk tier is focused on preserving capital and generating steady yield. It might simulate a mix like 40% stablecoins, 40% ETFs, 20% bonds. This mirrors a conservative portfolio you might build in traditional finance, but you're experiencing it and learning about it within this simulated DeFi context.
Okay, so like a safer, more traditional portfolio simulation. What if for people looking for potentially more growth?
Then you might choose the medium risk tier. This aims for balanced growth. The simulated mix might include more growth-oriented assets like blue-chip stocks alongside ETFs and stablecoins, maybe something like 30% ETFs, 25% stablecoins, 25% blue-chip stocks, 20% crypto. It balances stability with some upside potential. And for those comfortable with more volatility, the high-risk tier targets more aggressive yield. The simulation here might lean heavily into things like 40% growth crypto, 40% growth stocks, 20% high-risk ETFs. This lets you explore those higher-risk, potentially higher-reward strategies, like an aggressive growth portfolio in the real world.
And the key here is still simulation, not speculation,
Yeah.
right? No real money is moving initially.
Exactly. During the initial minimum viable product, MVP phase, no actual assets are bought or sold. What you see is transparent outcomes over time on your dashboard. It shows things like APY projections, allocations, and simulated growth. This protects you entirely from real financial loss while giving you this incredibly powerful, hands-on educational sandbox. It's genuinely learning by doing how these complex strategies work.
That tiered system sounds like a great way to learn about your own risk tolerance, too. And it's not just about picking a tier and watching, right? You mentioned influencing the strategy through voting.
That's the governance voting power aspect. Staking ELV gives you votes. But Elevra seems to take it further than many platforms. Your votes directly influence simulated capital decisions. For instance, the community might vote on choosing which tier receives new allocations of simulated funds coming into the system, or maybe redirecting simulated funds from one category to another, like shifting emphasis from simulated bonds to simulated tech stocks. This gives you direct, albeit simulated, influence over investment strategy. Plus, you also vote on platform development itself, new educational modules, interface upgrades, community projects.
Like they say, you're not just staking, you're shaping. That really drives home the user empowerment angle.
Precisely. And that's why ELV matters, according to Elevra. Most tokens, let's be honest, just exist for speculation. ELV seems designed with a clear job. Educate, simulate, empower. It tries to uniquely blend DeFi's transparency, TradFi's strategic sense, and community intelligence. Staking ELV isn't just about earning a simulated return, it's about learning, deciding, and directing. It embodies their closing thought on the token. The most valuable tokens don't just move price, they move people, and Elevra is here to move both.
Okay, that brings us neatly to Elevra's overall role in how DeFi is evolving, how it acts as the bridge trying to harmonize DeFi and TradFi for you. We know DeFi is powerful, innovative, but also chaotic, risky, focused on speculation sometimes, and TradFi, stable, familiar, but slow, gate-kept, not always accessible. That lends this big gap for a lot of people.
That is exactly the problem Elevra seems laser-focused on solving. It looks like it was specifically designed to blend that trustless, transparent logic we see in DeFi with the structured, often more risk-managed strategies from TradFi. The big goal appears to be creating a financial system, or at least a learning environment for one, that's transparent, governed by its community, and accessible to everyone, whether you're totally new or a seasoned crypto pro. It's about empowering people who might feel left out or intimidated by modern finance.
So how do they actually do that bridging? Can you give some specific examples of how they bring these two worlds together in a way that's relevant for someone trying to understand both?
Sure. Let's look at a few key functions. Take staking. DeFi has token locking for yield. TradFi has tiered portfolios based on risk. Elevra marries these through its risk-based staking simulation. You get to experience structured portfolios within a DeFi-like framework safely. Or think about yield generation. DeFi offers those high APY possibilities. TradFi offers returns from things like ETFs, bonds, stocks. Elevra combines these into simulated yield pools that draw potential returns from both sides. This gives you a more holistic view of how different asset classes might perform together.
And transparency, that's so core to DeFi. How does Elevra handle that blend?
Right. For transparency, DeFi gives you that raw on-chain data. TradFi has things like quarterly reports. Elevra seems to extend this by providing real-time, user-facing transparency charts. These aim to integrate insights from both worlds, showing simulated portfolio performance and allocations instantly. It offers a clarity that you might not get from either system alone. And lastly, governance. DeFi uses DAOs, token voting. TradFi is boards, investor control. Elevra leverages the DeFi model with ELV-based routing, but applies it to fund simulations that include TradFi concepts. You get to act like a stakeholder influencing a collective investment strategy.
So what this means for you, the listener, is that instead of just hype or needing a finance degree, Elevra lets you see what yield generation might look like in these blended portfolios. You can choose your simulated risk level, explore different paths, vote on simulated capital allocation. If you're already in DeFi, you can experience how traditional assets like ETFs or stocks might perform alongside crypto, all in one interactive space. It really is like a sandbox for financial growth, where the only thing at risk is simulated capital.
And that constant emphasis on simulation, not speculation, is absolutely key. Elevra is explicitly protecting users from real financial risk while they learn. By simulating the portfolio logic, it lets you understand how these combined DeFi plus TradFi investments might behave, but in a controlled, visible way. It trains you in decision-making, in strategic thinking, without the fear of losing real money during that crucial learning phase. It's about building confidence through practical, safe experience.
As they phrase it, people don't need more coins, they need confidence. Elevra teaches financial thinking in a decentralized age. That really gets to the heart of their vision, addressing a massive need out there. Which leads us to this idea of the rise of the educated DeFi user. It feels like many crypto projects kind of go wrong by assuming everyone's already an expert or only cares about crazy APYs or thinks community is just marketing fluff. But the reality is most people are overwhelmed, easily misled.
That's a really critical point. So many projects focus entirely on the tech, the tokenomics, but they completely forget the user's actual journey. They ignore the need for clarity, for risk education, for strategic frameworks, and that often creates a user base that's passive, maybe just following trends, or easily swayed by the next big promise, as you said.
But Elevra seems to be aiming for something different. The educated DeFi user. What does that mean?
It means someone who actually understands how these protocols work, at least fundamentally. Someone who can evaluate risk between different options, who knows the right questions to ask before just jumping in. This user isn't driven by hype, they're driven by logic, by understanding.
And why is this type of user so important? Why are they seen as the future of Web3?
Well, they're the future because they foster a more sustainable, more intelligent ecosystem. An educated user is more selective about where they put their time and attention. They're more likely to participate meaningfully in governance. They're more focused on long-term sustainable growth, not just quick flips. They're also the ones who can genuinely help bring others into the space responsibly. Elevra explicitly says it's built for active capital thinkers, people who want to understand and shape the strategy behind their financial moves.
And how does Elevra specifically help you become that educated user? What are the practical tools?
It's very much a learn-by-doing setup. They offer that simulated staking dashboard test strategies, no real money involved. There's a voting governance UI, visually see how capital decisions get made in the simulation. They have educational modules teaching core concepts like tokenomics, DeFi versus TradFi differences. There's transparent portfolio modeling showing simulated allocations over time, and even community bounties to reward people for participating, suggesting ideas, contributing.
So it's not just reading articles. It really is DeFi immersion. You experience the strategy directly. Want to see how a balanced ETF plus crypto portfolio might perform? Simulate it. Want to feel what governance power is like? Vote on simulated fund allocation. It's hands-on.
Exactly. It's about empowering you to act with knowledge. As they put it, knowledge creates power, but knowledge paired with action, that's Elevra.
Okay, let's make this even more real. Can we walk through some concrete examples of how different types of people might actually use Elevra? These really show the practical side. Let's start with the cautious beginner. Maybe someone totally new to DeFi but scared by those wild APY numbers, just wants to learn the ropes before risking anything.
Perfect starting point. This beginner jumps into Elevra's simulation. They choose the low-risk tier, maybe that mix of stablecoins and ETFs we mentioned. They can immediately start learning how those assets perform together, see the simulated APR projections update, maybe complete an educational module on ETFs. The outcome. They gain confidence, they gain clarity, they're much better prepared to eventually move real capital into DeFi, but doing it purposefully, understanding the risks and potential rewards, not just gambling.
Okay, scenario 2. The frustrated DeFi veteran. Someone who's been around, maybe got burned by a rug pull, tired of high gas fees, sick of pump and dumps. They want logic, transparency, sustainability. They probably know a VOM compound already.
Right, this user is looking for something more substantial. They might stake their ELV in the medium risk tier simulation. And it could actively participate in governance, maybe vote to shift simulated funds from, say, blue chip stocks towards Ethereum if they believe in its potential. They can monitor that transparency dashboard closely, see the results of community decisions. They might even propose new strategies in the forum. For them, the outcome is finding a platform that actually respects their experience, values logical thinking, and offers a level of transparent control often missing elsewhere in DeFi.
How about the financial educator? Someone teaching crypto or DeFi, always hunting for better tools to explain complex ideas.
Elevra could be a game changer for them. They can use the simulation dashboard live in a class or webinar to demonstrate yield mechanics. They can screen share the different staking tiers as visual aids. They could download the educational PDFs for their course materials. Maybe even have their students participate in mock governance votes within the simulation to see how collective decisions play out. Elevra basically becomes an interactive classroom simulator for decentralized finance.
Okay, one more. The governance enthusiast. Someone who loves DAOs, loves the idea of token holders having real power, seeks platforms where ownership equals influence.
This person dives right into Elevra's governance. Maybe they stake in the high-risk tier simulation to maximize their voting weight. They could draft a proposal for a completely new simulated asset allocation strategy. They might actively rally other users in the community to support their vote. And then they get to see their idea potentially implemented in the next simulation update. The outcome for them is a platform where their strategic thinking is heard, where they can test capital aggregation ideas, and have tangible influence within the system's rules.
It really drives home their point. There is no one type of Elevra user, only one shared goal: to grow smarter, together. It genuinely seems designed for a wide range of people on their financial journey, all focused on that cooperative educational aspect. And that leads us directly to the Elevra curriculum itself. And what comes next for you on this path to becoming, as they say, an educated capital allocator? There's clearly a strong vision behind this curriculum.
Absolutely. Most DeFi projects, they drop a white paper, maybe a few blog posts, and kind of expect users to just figure it out. In what's often a very complex, very risky environment, Elevra's approach is deliberately education first. It seems built from the ground up to create confidence by providing clarity, to equip users to simulate, to understand, to decide, not just click buttons hoping for the best. The goal is fostering this new wave of DeFi-capable thinkers.
And they've structured this learning path in layers, right? What does that journey look like for someone going through it?
Yeah, it's a layered approach. It starts with foundations, basic DeFi concepts, Web3, wallets, understanding risks, then mechanics, digging into tokenomics, staking, how governance works, using interactive charts and maybe quizzes. Next up is simulations. This is where you get hands-on with the dashboard, choosing risk tiers, seeing simulated yield allocation. After that, governance, focusing on how the community directs simulated funds, using the voting UI, maybe guided tutorials on proposing ideas, and finally, certification. You can earn an Elevra Capital Navigator badge, likely after completing the modules and maybe passing a quiz.
Can we get a little preview of some of those modules? What kind of practical knowledge are we talking about?
Sure. For instance, Module 1, DeFi Fundamentals. This covers the basics. What is DeFi? What are the key CeFi versus DeFi differences? How do wallets and smart contracts actually work? It introduces the major types of protocols. It's your essential starting point. Then Module 2, Tokenomics and Staking Logic. This dives into those token models, inflationary, deflationary utility. Why do they matter? What's the role of staking and token emissions? It explains Elevra's own hybrid model and what really gives a token value. Crucial for understanding the engine of these systems.
And Module 3 sounds like where the TradFi bridge really gets built.
Exactly. Module 3, TradFi 101 for crypto users. This specifically brings in traditional finance concepts, explains ETFs, bonds, dividend stocks. Importantly, it clarifies simulated versus real returns and details how Elevra integrates these TradFi concepts into its simulation logic. It directly connects the two worlds. Then, Module 4, Governance and Capital Voting. How does voting weight work in Elevra? What about delegating votes? How do you make a good proposal? It uses real scenarios to show how you might vote on deploying simulated funds. Practical experience in decentralized decision-making. And finally, Module 5, portfolio simulation challenges. This is where you put it all together. You pick a tier, maybe adjust allocations, track the simulated yield over 30, 60, 90 days. You can even compare how you did against the community average. Pure hands-on, risk-free learning.
This really doesn't sound like just basic onboarding. It sounds more like a DeFi development program, really training people to be confident allocators, encouraging them to participate in governance, giving them a real grasp of these digital wealth systems.
And they even reward completion with that Elevra certification, the Capital Navigator NFT badge. Plus, potentially priority access to future features and maybe specific community roles with more governance weight early on. It's about recognizing and building expertise.
That closing thought on the curriculum hits hard. If DeFi is the future, then financial literacy is the key to unlocking it. Elevra hands you both. That deep commitment to education feels like their core differentiator. Okay, so you've now heard what Elevra is about. A DeFi platform centered on education, transparency, community control. A token designed to empower learning by doing. A system simulating capital strategy, not just gambling. You're now equipped with a level of understanding that, honestly, many people already active in DeFi probably lack. So what can you actually do next if this resonates with you? First, claim your spot. You can join the Elevra waitlist. This apparently gets you early access, invites to beta tools, and makes you eligible for those governance roles later on. Second, share the mission. Elevra's model seems based on collective intelligence. The more informed people involved, the stronger the ecosystem. So share this deep dive, share their educational materials, spread the word if you believe in the vision. And third, get involved with governance. Once those simulations are live, use your ELV to vote on portfolio strategy. Propose your own ideas. Collaborate in the community forums.
As they say, your ELV won't just be a coin. It will be your seat at the table. It's about active participation.
And Elevra does have a roadmap looking ahead. They mention expanding the MVP with a full simulation dashboard, more tier options, real-time charts for better transparency on yield logic, shareable tools for educators, those NFT badges for contributors, and eventually planning a bridge to real yield for partners, potentially linking the simulation to actual capital flows down the line. Jeremiah's final message really wraps it all up. This isn't just about crypto. This is about ownership of capital, of knowledge, of growth. Elevra is the future you were told was too complicated. Now it's yours to control. That speaks directly to empowering the user, democratizing financial understanding.
And that brings us to the end of this deep dive into Elevra. We've looked at their vision, the gap they aim to fill between TradFi and DeFi, and the real-world implications of this education-first, community-driven approach.
Yeah, what's really striking is how Elevra seems to want to shift financial education from just passively consuming information to actively participating, actively deciding, making complex capital strategy accessible, understandable, transparent for everyone. It really does try to rebalance the power.
So the final thought for you, our listener. What does this all mean for you? Think about how this blend, decentralized freedom combined with structured financial learning, could reshape your own understanding of investment, but maybe even impact the bigger picture of how we all interact with capital. What new possibilities does this kind of cooperative future unlock for you now that you're potentially becoming a more educated, more empowered participant in this evolving financial world?